The US housing market has experienced its fair share of ups and downs over the last decade. Emerging from the devastating 2007 crash, early signs suggested stability rather than the formation of a new bubble. Initially, home prices across various regions barely moved. However, as we entered the latter half of the 2010s, a noticeable shift occurred. Home prices began to stir concerns, and by the beginning of 2020, there was a noticeable consensus that a correction was inevitable to address the substantial growth observed in the preceding years. Contrary to these expectations, what transpired caught everyone off guard, including industry experts. Far from crashing, the market, fueled by rapid inflation, historically low interest rates, and a surge in demand, saw prices escalate to unprecedented levels. According to Redfin, in January 2021, the median asking price for a single-family home in the US was approximately $280,000. Fast forward to today, and that figure has soared to $410,000, an increase of 46%. Yet this percentage alone doesn't fully convey the true frenzy of the market expansion. To truly understand the current state of the housing market, one must look beyond the asking prices to the monthly payments that homeowners commit to for decades. The real measure of market affordability often gets overlooked when we focus solely on sale or listing prices. What matters most for most buyers, especially those financing their homes, is the monthly outflow from their bank accounts. This figure is heavily influenced by interest rates, which are largely determined by the Federal Reserve. For a clearer picture, consider Redfin's latest report. While home asking prices have risen by 46% since January 2021, the monthly payments for home buyers have skyrocketed from about $1,400 to a record high of $2,747. That's a staggering 96% increase. This disparity highlights a more alarming scenario than initial price tags suggest, emphasizing that the real impact on consumers is far more severe than traditional metrics might indicate. So what will happen? If you look across YouTube and read the thousands of comments on Reddit, Facebook, and other social media sites, it's pretty clear that plenty of people believe a crash is ahead, but after 4 years of failure, maybe it's time we revisit some of those ideas. Maybe this supposed crash and bubble isn't what we all think it is. Now, before you click off the video in an angry rage, just take a moment to hear the other side of the story. One that begins with a basic premise. We all know the concept of supply and demand. I'm not going to bore you with the details, but it's pretty clear that housing is very important to Americans in every single state and in every single city. It's literally part of the American dream. We can all agree that most people strive to own a home, and as much as we love to complain about these prices, there is no denying that despite these absurd conditions, people are still actively buying, and those already in homes are refusing to sell. What happened over the last 4 years can be compared to what was happening to rent-controlled apartments. For example, in New York City, there are approximately 16,000 apartments that have been continuously occupied since the 1970s that fall into this rent control category. What this means is that the government essentially stepped in and told landlords they could only raise the monthly rent by a set standard, usually in line with inflation. Now, what this resulted in nearly 50 years later is simply astonishing. You now have a select number of people paying $600 a month to live in prime spots throughout Manhattan, while their neighbors in similar apartments pay rates 7 to 10 times more. Now, from the perspective of a normal person, you would say, great, this is a good thing, affordable housing in one of the world's most exclusive spots. But extend this to a greater scale and you get a supply issue. You see, the reason a lot of these residents in rent-controlled apartments continue to live there for decades is obviously because they're getting the deal of a lifetime. This simply means these people are never moving out, which reduces the number of units available for everyone else, thereby increasing rents in theory. In New York City, this isn't a massive issue because there are not many of these units left, where you have people from the 70s continuously living there, but zoom out across the nation and you see this similar effect in another area. Remember how I said earlier that the government essentially controls interest rates? Well, back in 2009, following the worst housing crash since the Great Depression, the US government pushed the federal funds rate down to essentially zero. Now, what does this have to do with rent control and the events that are happening now? The government pushed these rates all the way down here because they knew that to kickstart the economy and most importantly the housing market, mortgage rates needed to drop. And with this push, they did. The average 30-year mortgage in this country began to get suppressed in the post-2010 years, eventually falling to 2.65% in January of 2021. According to the Bank of England, this was the lowest rate not only in this country's history, but in 5,000 years of civilization. Now, to make matters worse, we know that most people in this country, when they purchase a home, they do so with a fixed rate 30-year mortgage. What this means is that homeowners are guaranteed that rate or lower for the rest of their term. There is no other financial instrument like this. If 20 years from now the rate is somehow 1%, a bank would allow you to refinance your loan to that lower amount with no additional fees other than the typical refinance cost. This means that in 2021, nearly everyone in the country with a mortgage refinanced to a historically low rate guaranteed for 30 years, and this event right here is similar to rent control. These people that bought homes or refinanced in this period are going to have a very hard time selling when the current rate is over 7% and current prices are significantly higher as well. This acts as sort of a government-induced rent control where you have people who were lucky enough to lock in the 30-year at 2%. These people are never selling because it simply doesn't make sense financially. You can easily see this by looking at a sales volume chart which shows the number of existing homes that are for sale. With nobody willing to move, what you get is this, a complete collapse. But this collapse doesn't necessarily mean prices are on the decline, it just means volume is. In fact, prices have been in a massive uptrend, partially due to the fact that there is no reason for a lot of these people to sell unless they get some sort of crazy incentive to move, and that incentive is a massive profit on their home. Now the question is, what will happen if rates ever do fall under 5% again? The general consensus is that home prices will go up even further. We know that compared to other Western democracies, the United States always had affordability. In comparing the US and Canadian housing markets, the disparities are striking. Ben Carlson discussed this in depth in his September 2023 article linked below. Analyzing the data through the lens of disposable income, it's clear that the US could experience a significant rise in housing prices much higher than what we see today if Canada serves as a reliable indicator. Although real housing prices in the United States have been rising faster than real disposable income, this trend has maintained a relatively stable relationship over the last 50 years, with incomes generally keeping up with housing costs after adjusting for inflation. However, the situation in Canada over the past 2 decades has dramatically diverged. The housing market there has soared to levels far beyond those seen in the US. While this doesn't make buying a home in the US any less challenging, it's also a clear indication that things can always get much worse, and now that we have a lock-in effect that will stay with us for decades, it will be interesting to see just how far up we can go. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed the video. I know I've been away for a while, but I hope to be uploading consistently once again in the coming week. Let me know what you think about the future of housing prices here in the US in the comments below.